Hey everyone, welcome back to another video of Economics with me, Teacher Z. And in today's video, I'm going to talk about the Paper 1 multiple choice exam for accounting, Cambridge IGCSE level, period May-June 2021. Okay, so here we go for the questions. Number 1, which statements about bookkeeping and accounting are correct? So you will be presented with 4 possible answers. Number 1, accounting is performed periodically rather than daily. Number 2, accounting relies on having accurate bookkeeping records. Number 3, bookkeeping includes the preparations of financial statements. And number 4, bookkeeping involves the recording of financial transactions. Before you choose which answer is correct, you need to understand the definitions first so that you can analyze based on the possible answers. Okay? So, the definition of bookkeeping, okay, is actually a process of a detailed recording, a process of detailed recordings of all the financial transactions of a business. Okay, so bookkeeping again is a process of detailed recordings of all the financial transactions of a business. So as some of you already know that the recording of the financial transaction is actually takes place on day-to-day basis. Okay, day-to-day basis. So every day there will be financial transactions. There will be payment, there will be receiving money, there will be credit, and all the stuff. Okay, so those kind of transactions will be recorded in the bookkeeping. All right, so next is the definition of accounting. Now, accounting is slightly different from the bookkeeping. Accounting is actually using bookkeeping records. Okay, so the bookkeeping is a process of recording, while accounting is actually using the bookkeeping records, the data that has been recorded by the bookkeeping. Okay, so accounting is using bookkeeping records to prepare financial statements and to assist in decision making. Okay, in every business, whenever they want to decide on something, whether they want to expand or whether they want to increase sales, for example, this decision making process is using what we call data. Okay, so based on this data, they can analyze whether or not the company should expand to overseas, for example. So financial statements is one example of that particular data. And these financial statements is actually happens periodically. Okay, it can be monthly or yearly. Okay, so it's periodically. Okay, so why the decision making needs to use the data? Because the owner of the business needs to know whether or not the business or his business is making a profit or suffering from a loss. So based on these definitions, we should be able to answer the questions correctly. All right, let's analyze this. Number 1, accounting is performed periodically rather than daily. That is correct. Here you can see here happens periodically, the final sales statement. So final sales statements prepared by the accountant or the accounting process. So for possible answers, number 1 is actually correct. For possible answer number 2, accounting relies on having accurate bookkeeping records. This is actually true. As you can see here, accounting is using bookkeeping records. So the bookkeeping records needs to be reliable and accurate. Okay, if the bookkeeping of the bookkeeping record is not reliable or inaccurate, then the decision making will be mislead. Okay, so possible answers number 2 is correct. Possible answer number 3. Bookkeeping includes the preparation of financial statements. As you can see here, to prepare financial statements is the process of accounting, not the bookkeeping. Bookkeeping is actually recording a daily or day-to-day financial transactions. Okay, so options number 3 is incorrect. Option number 4, bookkeeping involves the recording of financial transaction. That is correct. Here, as you can see, the definition of bookkeeping is actually recording all the financial transactions. So the correct answer would be 1, 2, and 4, which is A. Okay, so hopefully this helps, and I'll see you in the next video. Until then, ciao.